Next on the agenda, we have the FY26 budget, the final draft. And at this time, I'm going to call on Treasurer Kari Petrosic, Treasurer and President-elect Kari Petrosic, and Director of Finance Tiffany Lynch. Thank you both for being here.
All right, well, good morning. Good morning, everyone. It's been my pleasure serving as your treasurer for this last year. I want to give a world of thanks to Tiffany and her staff for the work that they've done, as well as the entire Budget and Audit Committee this year. Everyone has done a great job in putting together this year's budget that we've had a chance to review and discuss several times now. And currently, you can find the proposed budget on, I just lost it here, page 105 of your materials. And Tiffany will also be having it up on the screen as well. And I will turn it over to Director Lynch now.
Thank you, Treasurer Petrosic. Right, so the board reviewed the first draft of the budget in July, and so what we're bringing forward to you today is the final draft. So we're requesting review and approval of the draft or the final version of the budget, as well as 3 requests to increase dues from sections: the business law, health law, and labor and employment section. So materials are on page 105. Individual cost center budgets start on page 112. So we'll walk through the changes from the first draft. And then, as you recall, we talked about the versions having 2 versions of the final draft depending upon your vote regarding the license fee hardship exemption, which you just approved. So what we'll be focusing on today is version 1, but in the memo, there's 2 versions. So version 1 is the one that we're requesting for approval. So the final version of the budget is inclusive of the section budgets. So a lot of the changes in the revenue and direct expense are related to all 29 section budgets being included. So overall, from the first draft to the final, you see a 1.9% increase in revenue, about $500,000, and then total expense increase of $261,000. Direct expense increased by $909,000 and indirect expense reduction of $647,000. So overall use of reserves or net loss decreased by $250,000. So we'll walk through all those changes in the next few slides. So again, skip version 2 since you just approved the other the hardship exemption changes. So indirect expenses reduced by 2.7% or about $648,000. That includes a decrease in salaries of 5%. By and large, that's because of a reduction in our FTEs by 7, and that's related to our IT department staff restructure that we discussed briefly at the last meeting. We also reduced our capital labor, which is specifically for development projects, software development projects at the WSBA. Both of the projects that we had anticipated originally finishing in 2026 will now finish in 2025. So pretty much done by the end of this fiscal year. Benefits and payroll taxes also reduced 15%. And that's again tied to those 7 FTEs, as well as a pretty significant reduction in our retirement contribution rate. The Department of Retirement Systems announced to us after the first draft of the budget was prepared that they'd be reducing the contribution rate from 8.4% to 5.58%, which is pretty significant. It's applied to our gross salary, so that's a big reduction as well. Our other indirect expenses increased by 20.8%. It's $828,000. So with the IT restructure, by reducing our FTEs, we are turning to rely on vendor contracts to support us with help desk and software development. And so those direct expenses are now included in the computer pooled expenses line item, which is in the technology cost center. So it's kind of a swap from the salaries to those direct expenses. So focus here on the top box that's highlighted with the blue banner. That's the first draft. For the general fund specifically, we have a total net loss or use of reserves for the final budget of $917,000. Revenue reduced by 140,000, which is directly related to our assumption based on the hardship exemption changes. So with the changes made, that reduces our license fees revenue for the next year. Expenses, we mentioned already, by and large, it's the change to indirect expenses, about 647,000, but we also made direct expense changes. The biggest one is related to the moderate means program. We removed the direct expenses out of the operational budget because the program itself is currently under assessment and there's recommendations that are being reviewed right now as to how the program will move forward. So the next agenda item has a recommendation to earmark $300,000 that was previously in the operational budget into the special projects and reserve fund specifically for moderate means. So making sure that we have the money set aside, but because we don't know exactly what the plan is, we've chosen to not include it in the operational budget at this time. We also have some additional expenses for the next gen bar exam. That is something that's been, obviously in the works and trying to figure out how it's going to happen logistically. And those changes were made back in the summer. So we are now, again, the exam will be held in July. So adjusting our expenses for that, those changes as well. And then we also have software hosting of $20,000 for regulatory reform. The Regulatory Reform Cost Center has the programmatic expenses for developing the Alternative Pathways project. So that is the assumption that we will need to get our software in line and updated and developed to accept applications. And that will happen in this fiscal year in preparation for go live in fiscal 2027. We also had changes to our sales tax. And I'm sure many of you probably know about this and it affects you in your businesses, but a lot of different changes to sales tax requirements and different expenses that are now taxable, one of which is court reporter expenses. So collectively across the organization, we had to increase our court reporter expenses to accommodate for the sales tax effective October 1st. And then lastly, the ambassador program training, that's new for this year. We added $10,000 to the budget to support a number of different trainings that the communications team is planning. CLE and Client Protection Fund budgets, the only thing that changed was the impact of the indirects. So nothing happened with revenue and direct expenses, pretty minor changes. You see here CLE fund budget has a slightly lower use of reserves to 131,000, and Client Protection Fund has a slightly lower addition to their reserves of 244,000. So section fund budgets, this is the first view of it that you have. All of the section budgets are, I believe, on page 214, start on page 214. So this is just comparison to the 2025 budget. It's a slight increase in revenue. And I mentioned below that those three sections, business law, health law, and labor employment, are requesting an increase to their dues, which were unanimously approved by the Budget and Audit Committee. And then in terms of expenses, about $50,000 increase in direct expenses for all of their different activities. So overall use of reserves of $437,000 budgeted for fiscal 2026. In terms of how that compares to 2025, pretty minimal, $40,000 increase. Are there any questions about the fund budgets before we talk a little bit about the fund balances and how that impacts the fund balances?
I'm sorry, I missed the bit about the overall expenses were going down because of a reduction in headcount overall, but this client protection fund increase expense and the
CLE.
was it section budget both increased. I think the CLE go down.
CLE
CLE
goes
went
down.
which
Client protection is the only one that goes up.
Expenses for sections went up too, right?
Yes. Yes.
And that was just
Every single individual section's budget and their plans for every year collectively. Yeah.
Thanks.
Okay. So this chart, you can ignore the far right the two far right columns for draft two, since we're not considering that at this point in time. But this just tells you what our estimated fund balances would be in each fund at the end of fiscal 2026 if we hit our budget for 25 and for 26. So we'll have about 7.6 million in the general fund, of which we have four, reserve funds there, operating being 2.5 million as required by the fiscal policy. And then we've used up our facilities reserve funds. And then we also have our special projects and innovation fund, which will also be used. So unrestricted about 5.1 million. And this is not including the next agenda item and the recommendations there. CLE fund will be just over $1 million, client protection 5.2, and sections fund 1.2. Now, focusing specifically on the general fund, we're pretty close to the end of the year, so we have some projections for where we think we're going to end this year. No surprise if we've been saying this for a while, but of course we're outperforming our budget. So you can see here the projection for 2025. While we do have a net loss or use of reserves, that is covered by and large by the Special Projects and Innovation Fund reserve and the Facilities Fund. So we do anticipate the unrestricted reserve to have a slight increase by the end of the year. And so that's why you see unrestricted reserves going from 7 million to 7.1 million. And then, of course, for budget version 1, that means that we'll hit about 6.1 million at the end of next year if we hit our budget. If we consider being conservative and outperform that, those far right columns reflect a slightly lower use of our reserves. So just to give you some context for, by approving this budget, this is the impact on our reserves. I think, unless there's any other questions, I think that's it for the budget.
Any questions, comments, discussion? Well, I would definitely want to thank both of you for your excellent presentation and great work as always. But I do see does Nancy Hawkins have a question?
I'll bring it around. So this is a little bit of a broken record, but approaching it from a different angle. When I review the budget materials, we see significant decreases in the cost of programs and staff. Reduction of almost $500,000. And I'm looking at page 95, indirect expenses under budget, with a savings of $347,000. We never see a corresponding change in the per member charge that sections are required to pay. We never see an analysis as to why that is. I think sections pay a very large amount of their member dues back to the organization for this per member charge. And I think it's time for that to be examined to see if there's a either different way to calculate it, or whether or not the organization should be more supportive of sections by either reducing or eliminating the per member charge. And I understand that that's something that's going to take some conversation and obviously work with budget and audit and work with staff. But we hear often how much sections are valued, and yet it would be nice if we saw some proof of that in terms of an understanding that maybe we can do something with more of a greater share of the dues than the Bar Association can do with that amount of money. It's our members that pay license fees. It's our members that pay dues for our section. I'm fairly confident that most section members don't have any clue as to the high percentage of their dues that just goes back to the organization, in effect as an increase in their license fees. So I would like, I don't think you're going to eliminate the per member charge today. I'm not crazy, but I think it's time to have that discussion. Whether it's a reduction or an elimination, it's time to have that discussion. Year after year, we see how, and we hear that we budget high and then are pleased when we actually spend less money. But it's not like we charge the per member charge high and then reduce it during the year. Ours stays the same. You still get our money at the higher rate. So that would be my request to the organization, to see what we can do to help all the sections do more with their money.
Thank you, Nancy Hawkins. And I believe I see. Don't move yet. Hey, you're still on the hot seat. Just kidding. Former Governor Williams.
The RPPT section has no comment on this budget. We were supporting it as it was, and we're grateful. And I will just let you know that the conversation we have had about the topic that Ms. Hawkins raised, because these are concerns. I will just say that the RPPT section and its executive committee have a different take. We're actually anticipating there's going to come a time where our amazing Carolyn McGregor reaches capacity. There are more sections coming out. There are more areas of law. We're anticipating a time where she's going to be like, I can't take 36 sections, So we think it's fair. We see what the value is of the per member charge in the services that we get from Carolyn, from Sally, from all the people I'm not going to name that go through that support the sections and that team, through the CLEs that we provide and the smooth use of our technology team that brings it together. So if there's anything I might echo is more transparency. If some people are and sections and members need the actual full cookbook, give it to them. My sections, both RPPT and the LGBTQ section, benefit from my experience as a governor that spent way too much time being a governor to learn all the ins and outs of the processes so I could explain these things and really dial back. You may remember 4 or 5 years ago, RPPT was one of the people that would send their screaming members here because they didn't fully see what you all are dealing with. And I do know how to read the reports from our treasurer and our finance director, and I can decipher them. Not everyone has that experience. But I personally, and RPPT is not at all objecting to the idea that we're going to be raising dues a little bit every year. I was able to bring them on board on why it makes fiscal responsible sense. And also the fee that is charged for us, because we talked about what it would look like if we all decided to go off and start our own individual private bar association and community of members, kind of like what Draw did, and how much it would cost to get the same level of support that we get from the Washington State Bar Association for the work that we do as the real property probate and trust section. So again, I thank you for the work, and I look forward to your presidency that's going to be, it's going to be great. We really do feel good things are coming, but if there is a ability to be more transparent and just give someone, it's not secret. Just say, if you want the whole thing and you want the absolute breakdown, here's the 17,000 pages, have fun. Because we all know that the auditors have been through it and it's clean and there's nothing about it. You obviously wouldn't put it in a board book, but if there are people who want it, by all means, let them read themselves to sleep every night looking at the numbers for the Bar Association. And I thank you for your time.
Thank you, former Governor Williams-Ruth. Oh, not yet. Oh, and I think I have a question from Governor Arneson.
Thank you. I have a question for Director Lynch. Two questions. When was the last time that the section per member charge was evaluated? And is there a policy for how frequently that's done?
Sure.
Thank you.
The per member charge is calculated annually. So it's something that comes to the Budget and Audit Committee. The full calculation is provided to the committee as well as to all of the section chairs and executive committees for their dissemination when they're preparing their budgets. So I just wanted to point out too that the way that the per member charge is calculated, the staffing that's allocated is direct staffing support to sections. So as former Governor Williams-Ruth said, Carolyn McGregor is a direct staff person who works specifically for sections. It doesn't include, by and large, say my team that produces all the financial statements for the section. So that's very specific about it, specifically those staff. And so the reduction in our staff for this purpose is our IT staff, which are not allocated to the per member charge.
Any other questions? Governor Bloom.
Yeah, no, I noticed there were a handful of committees or sections, I'm sorry, that in appendices, what, FGH, I think, and health law section and a couple others, I think. What's the relationship between the per member charge and the amount that the sections charge their members to be a member? And if there's an excess, I mean, if the per member charge is $25 and they're charging members $30, say, for example, what happens with that delta?
So that delta is essentially how they're funding all of their expenses. And so otherwise, right, they'd either be at a net zero or a loss. So the per member charge for next year is $18.75. And so for all of these that are increasing to $25 or $30, the delta is what they keep to support their direct expenses, as well as fund balances. So every section has a running fund balance. So they have reserves to tap into as well if they budget a net loss.
If the section has CLE offerings and things of that nature that provide revenue in excess of the cost of putting that on, then that would be another source of revenue then, is that to the section? Is that correct? Then? Okay.
Mm-hmm.
Okay, good. Thanks.
At this time, I would entertain a motion regarding approval of the budget.
I move to approve the budget.
Seconded.
So moved and seconded. I'm going to ask Executive Director Nevitt to do a roll call vote. Oh, yeah. And if anyone wants to discuss, this is your opportunity before we take a vote. Seeing and hearing nothing, we're going to move to the vote.
Okay, this is on the motion to approve the budget as presented this morning and in the materials. Christina Larry.
Aye.
Todd Bloom.
Aye.
Jordan Couch.
Aye.
Chris Vang.
Yes.
Kari Petrosik. Tom Ahern.
Yes.
Allison Whitney.
Yes.
Mary Rathbone.
Aye.
Harvin Price.
Yes.
Alain Villeneuve.
Yes.
Kevin Fay.
Yes.
Emily Arneson.
Yes.
Nam Nguyen. Matthew Dresden.
Yes.
Budget passes unanimously.
Well done. There is one more item, I believe, and with respect to the Bog Reserve Fund recommendations.
It's just me.
That's just you. It's on you.
Okay, so the materials for this are on page 256. It is a request to reallocate reserve funds from the unrestricted reserve to the Special Projects and Innovation Fund reserved. $460,000 is the request. I mentioned already in the budget presentation, $300,000 of the 460 is for moderate means and earmarking that. The remaining 160,000 is for the Regulatory Reform Cost Center and the Alternative Pathways to Practice. The fiscal 25 budget also included funds to put towards that project, as well as our entity regulation project, both of which were underway in 2025. So 2026 will be another year of sort of that startup, the work going towards launching that particular project. So the $160,000 is what is needed to cover the full cost center, which is about $240,000 for next fiscal year. We will have about $80,000 remaining from fiscal 25 in the Special Projects and Innovation Fund reserve to use. So that's why it's not the full $240,000. So that's the request.
Sorry about that. Yeah. Any discussions, questions for Director Lynch?
Actually, because I think some members might ask this question. Is there a breakdown or between the alternative pathways and the entity regulation in that?
Yeah, so for fiscal 26, the budget for entity regulation is in completely separate cost center now. So all of that, it has revenue and expenses, and that's why, because it has launched and will be active next year, is its own.
Any other questions? Comments? Okay. At this point, I would entertain a motion.
Seconded.
Wonderful. Approved and seconded. Any last discussion about this? Seeing no hands, we're going to proceed to a roll call vote.
This is on the motion to approve the bog reserve fund recommendations as presented and in the materials. Christina Larry. Aye. Todd Bloom.
Aye.
Jordan Couch.
Aye.
Chris Bang.
Yes.
Kari Petrosic.
Aye.
Tom Ahern.
Yes.
Allison Whitney.
Aye.
Mary Rathbone.
Yes.
Parvin Price.
Yes.
Alain Villeneuve.
Yes.
Kevin Fay.
Aye.
Emily Arneson.
Yes.
Nam Nguyen.
Aye.
And Matthew Dresden.
Aye.
Passes unanimously.
Thank you so much, Director Lynch, as always. Well, we hit another home run. That's fantastic.